Hey everyone, my name is Eman Irfan bin Abdul Manan and my matrix number is 23DRM21F1029.
Assalamualaikum. My name is Ahmad Mukri Irshadi bin Ahmad Mukram. My number matrix is 23 DRM 21 F1043.
Assalamualaikum and very good morning to everyone and to my friends.
My name is Ilyas Ibrahim Muhammad Zamani. I'm from 1DRMA and my matric number is 23DRM21 F1046.
Is a delivery order. A delivery order is a document used by the supply as an acknowledgement of the delivery of goods ordered by the customer and is issued by the supply to the customer. It contains the date, details of item delivered, amount of item in quantity, address of delivery, date of delivery, and the name of person in charge.
So what exactly is a cash bill? A cash bill is a documented receipt of cash payment. Normally, it's used only in cash transaction and also issued by the seller. So this is the example of cash bills on the screen.
Okay. Sales order. Sales order is a document generated by a seller for its internal use in processing a customer order. The document initially translates the format of purchase order received from the customer into the format used by the seller. Okay, so next. Okay, for my last point is sales order. If I listen, we have purchase order, right? Okay, this is purchase order. Purchase order is a document used by a customer to order goods from a supplier. It contains the dates, item description, total value of, detail of expected delivery, term of discount, and the name of the person in charge. Okay, this is example of the item description, total value, details, term of discount, and person in charge. Okay, that is example.
Today I'm gonna tell you what is meaning of check, written inward and written outward. First of all, we go to the check. What is check actually? A check is an authorization to draw funds from a bank account. In order to do this, a check must state the name of the payee, the amount to be paid, and the date. A check is one of the more common form of payment used. A check is typically written to the authorized payment to a specific entity known as the payee. However, a check can also be written to cash, which means that payment will be made by the bank to whomever presents the check. The routing of a check is as follows: from the payer to payee, from the payee to the bank of the payee, from the bank of the payee to the bank of the payer. A check is usually negotiable, so that the payee can assign it to another person by endorsing. Now we go to the example of the check. Alright, this is the example of the check.
Today I will talk about special journal, which is purchase journal and sales journal. Okay, purchase journal. Purchase journal is also known as a purchase daybook. It is used to record credit purchase of business inventory only. The credit purchase of non-current asset cannot be recorded in the purchase journal. It is written up for invoice received by business. At the end of the month, the business will know the total credit purchase made in that month. So that is example of purchase journal. You can see. Okay, next is sales journal. Same as a purchase journal, not basically same, but sales journal has a sales daybook too, and it is used to record credit sale of business inventory only. The credit sales of non-current asset cannot be recorded in the sales journal. It is written up from invoice issue to customer, and basically at the end of the month, the business will know the total credit sales made in that month.
Written inward and written outwards. We go to definition. Written inward is the receipt backed by the seller of goods sold to the buyer. It is also termed as sales written. Written inward can take place for several reasons, including return of incorrect goods by the buyer, return of excess quantity of goods delivered to the buyer, return of defective goods sold. When goods are sold by the seller, instances may arise wherein the buyer is not satisfied with the goods received. In such situations, a return is initiated by the buyer. When the goods are received back by the seller, a credit note is raised on the buyer and entry is recorded in the books which completes the written inwards transaction. Example for written inward is ABC, a crockery manufacturer, sold 10,000 cut ceramic bowls to its customer, XYZ, for USD 2 per unit. On inspection of the consignment, XYZ found that 500 units were received in damaged condition. A return of these 500 units was initiated. Once goods are received back by the seller, a credit note for USD 1,000 will be raised by the seller, means ABC, on the buyer, XYZ, and the following entry in passed in the seller's book. Alright then, we go to written outwards. Written outward is the sending out of goods being written back by the buyer to the seller from who they were purchased. Written outward is thus also termed as purchase returns. The reason for initiating written outward transaction by the buyer are similar to those specified above in the discussion on written inwards. When the buyer is not satisfied with the goods purchased due to quality or quantity issues, or good purchase subsequently develop a defect within 2 exchange warranty periods, a written outward transaction is initiated. The buyer sends the goods to the seller along with a debit note, following which an entry for the written outward is passed in its books. For example, continuing the same example as written inward, XYZ raises a debit note for USD 1,000 on the seller, sends the goods back and passes the following entry in its books.
General journal. A general journal is also known as a general day books. It is used to record entries for business activities other than the above discussed proof of prime entries such as opening entries. Next, closing entries. Next, adjusting entries. Next, and correction of errors.
So we are already talked about cash bills, so let's talk about what is cash books. Cash books is a financial journal that contains all cash receipts. It is also contains bank deposits and withdrawals. Entries in the cash book are then posted into the general ledger. The cash book is periodically reconciled with the bank statements as an internal method of auditing. In cash book, there is 2 columns. At the left, we have the debit, and at the right, we have the credit side. 3 column cash book. It has 3 columns, which are discount allowed, cash in hand, and cash at bank on the debit side, and discount received, cash in hand, and cash at bank on the credit side of the cash book. This type of cash book is used to record entries with cash discount. So here are the example of 3-column cash book in the screen.